Good afternoon, everyone, and welcome to Link's annual results briefing. While we're hosting via webcast in consideration of the recent public health and social distancing measures, we are pleased to have with us today our CEO, Mr. George Hong Choi, CFO, Mr. Kok Siong-ng, and CSO, Mr. Eric Yao. During the course of the webcast, you may submit your questions on the webcast portal, and the questions will be conveyed to. Thank you, gentlemen. The first question comes from Justin Kwok from Goldman Sachs. On car parks in Hong Kong, is there any update on the segment? And given it was quite disrupted during the second half of 2019. And the second question is, on M&A front, how do you evaluate the opportunities or priorities among Hong Kong, mainland China, and also overseas?
I think the situation in car park has broadly stabilized compared to last year. I think when we saw the peak of the social unrest, there were indeed more rampant parking outside of the organized parking or car parks. And I think coming into this quarter, we're starting to see the car park coming back. I think what has happened this quarter is actually with the COVID-19. I think destination shopping has come off. In a way, people are not going to travel far, and consumption has been localized. So I think while we can see the hourly has come off slightly, I think overall the situation has stabilized. Other than that, I think to be fair, given the outlook, we believe that it's the right thing to suspend the car park tariff review for now.
Acquisition. With regards to acquisitions, we are seeing opportunities in both mainland China and overseas. Of course, the travel ban and the restrictions do make traveling overseas a bit more difficult. But we already have a team on the ground in China. As you know, we have assets across Guangzhou, Shenzhen, Beijing, and Shanghai. So having that team on the ground does facilitate with the due diligence process. We're still reviewing, and we'll see. You know, as some deals come to fruition, we'll update the market as and when.
Thank you. Next question comes from Vincent Fong from Manulife, and actually there's also a question from Ken Young of Citi. How is the 300 million rental concession accounted for in our P&L? And also, do you see any potential further upsize of this program?
The amount that we have budgeted for, I think, should be sufficient as we see it today. But obviously, we don't have a crystal ball whether we need more support, need to provide more support to our tenants. But so far, I think the amount should be sufficient. Accounting-wise, I'll answer it on behalf of KS. It depends on how we give it. But the easy way to say it is it will be written off over the remaining life of the lease. So depending on each of the particular circumstance, each lease will be different.
Okay, next question comes from Hildy Ling from Morgan Stanley, and also actually another question from Justin as well. On buyback strategy, the company has not announced a buyback budget for the financial year 2021. And should we assume you will only buy back the remaining 8 million units carry forward from last year? And will there be any more color or any concrete budget on this?
We have not been able to achieve the target last year because we did have periods where we have blackout for results and also for acquisitions. We do plan to complete the exercise this year. We will also consider further buyback when we believe that the price, the unit price, is at a level that is providing us an attractive option in terms of use of funds. But given the uncertainty, it is very hard for us to actually give you an estimate how much we will do. But we are in the market watching it every day.
Thank you. One more question from Hildy. It's about your view on online retail in Hong Kong and mainland China. Since e-commerce in Hong Kong seems like has expanded very rapidly all over a sudden after COVID-19, do you think this is sustainable, and how would that affect your business?
We have seen an increase in the use of online retail, and I think over the many years in the past, we always say that Hong Kong is probably the sort of last bastion of physical retail, with not that many people switching. Having said that, we also have seen some of our larger tenants delivering better result through ordering online, but picking up at the stores. We have obviously a lot of supermarkets and fresh markets. Those will continue to be attracting people to go and shop physically. Our food offering, whether it's fast food, restaurants, etc., continue to require people to go and eat there. The takeaway business has been additive to them, and we hope that will continue to be so. In China, I think the pattern is similar. I think it has increased the number of people going online, partly because of the stricter social distancing requirements. But I think if we provide a right shopping environment, attractive tenant mix, then we believe that people will come back once the trust of being able to gather in crowds pick up, and I think business of our tenants will improve very quickly.
This question is from Mark Leung from UBS. How are you planning to do the AE at Central Walk, and what will the AEI? How will the AEI impact on the occupancy?
We actually were planning to do the asset enhancement over a longer period of time by several phases. With what happened with the impact to the business in the last few months, we decided to shorten it, do a bigger exercise with fewer phases. So you'll see work starting in the coming few months. It will finish reasonably quickly. It will be quite a dramatic change in terms of how we change the interior, the tenant mix, etc. Some of the new tenants are already coming in, and we have seen pretty good reversion. We will say more later on, but the design has been done, has all been finalized. We're just going through the process to get all the contractors ready to start work. I think the experience that we have over many years in Hong Kong put us in a very good position to get a good return out of this change, and when the time comes, we'll report more. I think this will be transforming the property. We'll be rebranding it. It will be repositioned. And so we're very happy that so far the tenants that we have talked to are very supportive of this. Despite obviously some disruption during the construction phase.
Thank you. Questions from Carl Choi from BAML about footfall on both the Hong Kong portfolio and mainland China. He would like to ask about the footfall recovery status of the Hong Kong portfolio, and also for China, as it is about 60% of the normal level of the links China's malls. How confident are we in achieving positive rental reversion for next financial year?
So far, we've been seeing gradual recovery in footfall in both Hong Kong and China, and as well as a reopening of most of the tenants in our malls in Hong Kong and China as well. The leasing team obviously has been engaging with the tenants in all jurisdictions that we're operating in, talking about rental concessions for those who are in greater dire need, and also talking about negotiating for lease renewals as well. Based on the negotiations so far, and admittedly this year negotiations have slowed down because of the pandemic. But based on the negotiations so far, what we see, the trend is quite still positive in mainland China, where we think we should still be able to achieve a positive reversion for the full year. As for Hong Kong, it still needs to be seen, but we expect full year rentals should hopefully be stable, barring any unforeseeable drastic change or deterioration in the economic situation in Hong Kong and China.
We have about 120 new tenants joining us, opening shops since January. And because we didn't have a lockdown in Hong Kong, they've been able to fit out and open stores over the last few months. We have a few dozen new tenants and new leases under negotiation. So we are seeing people coming to Link, seeing that we have the footfall that is more stable than in some of the other shopping districts. We believe that have provided us a cushion, not just with our existing tenants, but also with new tenants. Some of the new tenants have not operated at Link properties before. They are creating new brands to come to our malls, while they have been very successful traditionally in some of the more traditional shopping areas, but they are now moving into our portfolio. We have also, as a matter of strategy, decided that it is better for our property to maintain high occupancy rather than insisting on very high rent for every tenant. I think that is a strategy that we believe will serve us well in the long run. It might challenge us financially for a short period of time, but we believe that the shopping environment is a lot better than having more vacant shops. So that obviously demands us to be flexible in dealing with some of the tenants that are more challenged. But then if you look at our trade mix, most of our tenants have actually benefited from the COVID-19 situation because these are community malls. We have supermarket and fresh market that have really been beneficiary of people buying food to cook at home, etc.
Thank you. The next question is from Shinkawa-san from Sumitomo on valuation. Link has reported a valuation loss of 24 billion this year, and mainly due to the lower rental projection and higher cap rate. Do you expect further downside for valuation?
I think when the board and management look at the latest valuation numbers, I think we recognize that it's the valuation as of end March. So it has taken, in effect, a share of what has happened in the market due to the pandemic. I guess going forward is anybody's guess. If we could manage to see some stability and clarity in the outlook, I think there's a chance that valuation will hold. But I think it's tough at this stage, as much as we can't give you a clarity on outlook to tell you whether valuation will hold or fall further. But I think the key thing is that the business as a whole and the balance sheet has the ability to withstand further movements in valuation to the downside. And I think that's what is important in running this business now.
I think if you want to look for any sort of forward guidance, what we can say is that looking at the tenants' performance since year-end, I think most of our tenants have started to find a floor, seeking that bottom and then picking up, barring any other surprises that we may not be aware of. I think we see that this portfolio of the assets that we have both in Hong Kong and China, we hope that we will be seeing more upside. Accounting-wise, obviously some of the concession will flow on to the next year or two. But in terms of tenant businesses, I think we probably have seen the worst, and it's really have stabilized and have improved.
In view of time, we will refer to two more questions from the online platform. This question is from John Lam of UBS. Regarding on online penetration, Link REIT is the biggest landlord in Hong Kong. Will you consider partnering with some online companies on your leasing strategy?
We have decided that we will facilitate our tenants to do their business. We hope that some of the tenants will take advantage of the recent change in shopping behavior to really do their omni-channel, online, offline integration a lot better. Over the past few years, we have, for example, encouraged companies to have, for example, delivery lockers, adding facilities for them to have online ordering and picking up in the physical stores. We are having as much conversation as we can to figure out what is the new normal. I think we are also very keen to work with our tenants to try and deliver their new design as well. Early days, a lot of them are doing soul searching, changing, and all that. But you use one extreme. The education center was almost totally closed when the schools are locked down in Hong Kong, and that's probably the most drastic because, as I said, restaurants were not all closed, etc. But schools were, and therefore the education center was largely closed. Some moved to online, Zoom, and all that. But even before the schools reopened, some of the education centers, as tutorial centers, have already restarted classes. People went back and go and learn piano and other musical instruments and take tutorials for their courses already. So I think the physical retail is not going away. It probably need to be done in a better way, and I think it's a wake-up call for some of our tenants. We continue to try and search for those tenants that will do well in the new normal. We have set up a task force to figure out what does that mean, and we are talking to a lot of our tenants to see how they are changing themselves to get our property ready to fit into their future strategy is very important. And I think we have demonstrated our agility and our speed and reaction in enhancing our assets. And so, we actually feel that our balance sheet is in a good position. Liquidity position is strong to handle any particular crisis that may come in the financial and capital markets. We hope to see dislocation in certain markets so that it allows us to do some acquisitions. And then in asset management, if we continue with our current team in proactively talking to our tenant, I think they will do well. And provided that this is all done in a coordinated manner, as we say, business as mutual, working together with all our stakeholders, we should be able to see a rebound sooner than I think a lot of our peers globally. Thank you.
Thank you. The last question is echoing to the question on valuation and also on Vision 2025 from Hildy. With a decline in valuation, have you changed your 2025 vision for high single-digit AUM growth? Is it a rolling target, and will you keep the same AUM target?
It depends on how you look at it. I think you see a valuation drop. Question is whether you think by 2025 it will bounce back. And so we'll be buying something that is, at good price, and then within the next few years it will pop up, and then will get us back to where we were. Obviously, that is a rather robust way of looking at it. We probably are, as you know, more conservative. We do review our vision and our targets at a regular intervals. We will be talking to our board in reviewing how we're going to achieve the target. I think the direction is very clear. The exact targets probably need some fine-tuning. I want to perhaps remind those on this call that Vision 2025 has 3 elements: portfolio growth, and also the excellence in creativity as 3-pronged approach for us to bring us to the next level. So we have strategy for each one of them, and so far I think just in the past year, despite all the challenges, we've made some achievements along each of these paths. And when you add them all together, I think we are in a much stronger position as we continue to look towards that date. Thank you.
Thank you very much, management, and thank you for everyone for viewing this webcast. The webcast archive will be available later tonight or early tomorrow morning, and we look forward to meeting every single one of you in person. And thank you for joining us today. If you have any questions, please feel free to contact any one of us, our management team, and also our IR team. Thank you.
Thank you.